Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the third video process costing chapter. Now in this video we're going to solve the second problem, and this is for your BCOM exams. Okay, it's a Bangalore University question. It was asked in 2016, 2014 as well as 2010. Alright, so now before going ahead with this video, let me just tell you what we have done in the previous videos. See, in the previous videos we have already seen the concept, the format, everything of process costing in the first video, yeah. And then in the second video we have solved one problem, illustration 2 of the ICI study material. Yes, we have seen that properly and we have solved this. Now let's get back to this video and let's solve this second problem. Now here we have the question. Let's go through it once. Let's try to understand what is happening over here. So see here, a product passes through 3 processes. For its completion, the following are the details. So we have been given the details in a table format. So let's understand this. See here in particulars column, what do we have first? Materials 84,820. Now this is the whole amount. Okay, the whole amount has been given, and then the bifurcation is also given. In X, the materials which have been put is 20,000. In Y, it is 30,200. In Z, it is 34,620. Fine. Then we have labor over here. See, labor 1,20,000 in total. Yeah, in all the processes, and the bifurcation of that 30,000, 40,000, 50,000 rupees. These all are amounts. Okay, fine. Then what do we have? Production overhead 60,000. Now here the production overhead is directly given as a total figure. Yeah, the bifurcation, the allocation of that is not given, so we have to allocate that. That's the main thing about this question. Okay, that's why I took this question. Okay, because here you have to do the allocation of production overhead. Okay, fine. Now in the previous question which we solved in that ICI study material problem, there what was there? There the bifurcation was already given. Yeah, here it is not given. Fine, it's simple, we'll do that. Then what do we have? See here, direct expenses 7,260, bifurcation is given 5,260 in the process Y, and in process Z there is nothing. Okay, only 2. Fine. Then normal loss percentage is given. See here, 10%, 5%, 10%. That's clear. Then what do we have? Sale of scrap per unit. So what is this? This is a scrap value of the loss. Yeah, scrap value of the loss has been given 3 rupees, 3 rupees, 5, and rupees 6. Fine. In the previous problem there was no scrap value, so we had to take nil. Yeah, but here the scrap value is there, so we will take the values. Fine. Then what do we have? Production units 920, 870, and 800. Now what is this production units? This is the output that is coming out of each of the process. From the X, the output that is coming out is 920. Then again the 920 will go into the process Y, and then the output that is coming out is 870. Then 870 will go into the process Z, and then the output from process Z, at last the finished goods, is 800 quantity. Is that clear? Simple. Yes. Then at the below they are saying 1000 units add rupees 50 per unit were introduced to process X. Yeah, what is this? See here, as you can see, there are 2 materials. Yeah, one material is this one, yeah, which is given 20,000, but this is not the main material, yeah, on which all the work will be happening. No, this is the extra material, other materials. The main material is this one. See here, 1000 units add rupees 50 per unit were introduced to process X, and then on these 1000 units, 920 is coming out, then it's going here and some work will be happening. So that is the main, yeah, this is the main units, the main raw material. Okay, these are the extra material that will be requiring in the process itself. Is that clear? So on this you will have to calculate the normal loss and everything. Okay, fine, we will see that while solving the problem, don't worry. Then they are saying production overheads to be allocated on the basis of direct labor. So what we have to do, we have to take the production overheads as the percentage of direct labor. We'll see that how to do that calculation, how to allocate the production overhead to all these processes. Yeah, this 60,000 we have to allocate them to XYZ on the basis of what? On the basis of direct labor, on the basis of this 30,000, 40,000, 50,000. It's simple, we'll see that, don't worry. Okay, so yeah, then they're saying prepare processes account, abnormal loss account, and abnormal gain account. We'll also try to prepare the normal loss account also if you have time. Okay, all right, let's start. Now here we have the solution, and as you can see I have already prepared the process account to save the time, and I hope you all know the format. You're perfectly clear with this. I'm assuming that you have watched the previous videos. Yeah, what we do in process account, whatever that goes into the process, the material, the expenses which we incur, all will come on the debit side, and whatever that has gone out of the process, the normal loss, abnormal loss, the output, it will come on the credit side, isn't it? And then why abnormal gain and profit on sale is coming on the debit side? That's because abnormal gain is opposite to abnormal loss. That's why it's coming on the debit side. And profit on sale, what is this? Whatever output you sell immediately from the process, yeah, in that if there is a profit, then that profit has to be reflected on the debit side so that your process account can tally. Is that clear? So that's the logic. Fine. So that's the format. Now let's get back to the question. Now see here in the question in process X, what do we have? See, first in process X we have here materials 20,000. Yes, now these, I told you, these are not the main raw material. Yeah, these are the other materials, but we have to take that in the process X, right? The actual raw materials is this one, the main one, 1000 units at rupees 50 per unit were introduced to process X. Yeah, these are the main raw materials. Why? Because the units are given over here, the exact rate is given over here, and they have said that these were introduced to process X. So these are the main raw material. Okay, so you have to take that here on the debit side because material is going into the process. Two materials, 1000 quantity, yeah, the units, and then the rate 50, 1000 into 50, that's 50,000. So that's the cost of the main raw material. Fine. And this raw material also we have to take this materials, yeah, other materials 20,000. So you have to take that, of course, on the debit side. Two other materials, there is no quantity or rate, so nothing, yeah, only the amount 20,000, only the cost you're going to take. Fine. Then what do we have? Then we have labor, yeah, 30,000 labor of process X. Take that. To labor expense, right? It will come on the debit side. To labor 30,000. Simple as that. There is no quantity, no rate. Simple. Then what do we have? Then we have production overhead. Yeah, we'll see that. Then we have direct expenses over here, 5,000. Again, expense. It will go on the debit side of the process account. Two direct expenses, 5,000. Simple. Then comes the production overhead. Yeah, production overhead is given as 60,000. Yes, it is 60,000, and the bifurcation, the allocation of that is not given. So we have to do that. Here below they have said production overheads to be allocated on the basis of direct labor. Yeah, so what are we going to do? So all we're going to do is we are just going to use the ratio of the direct labor, and we are going to allocate this 60,000. Is that clear? Simple. It's very simple. See here what we have to do. See this working note, production overhead for process X, right? So 60,000 is the total production overhead, isn't it? 60,000 is the total production overhead. Now what we are going to do into, see here, the direct labor in process X is 30,000. The direct labor is 30,000. So all you have to do is 60,000 into 30,000 divide by 1,20,000. From where did I get this 1,20,000? We didn't understand that. See, it's very simple. The total direct labor is 1,20,000, isn't it? 30 plus 40 plus 50. Yeah, let me show you in the calculator. 30 plus 40 plus 50, that's equal to 120. Yeah, 1,20,000, isn't it? So that's the total direct labor. All you're going to do is just use the ratio of that. 60,000 is the total production overhead into the direct labor in this process is 30,000 into 30,000 divided by the total direct labor 1,20,000, that's equal to 15,000. Yeah, so on the basis of direct labor, yeah, in that proportion we have allocated the production overhead. Yeah, so 15,000 of that 60,000, 15,000 of that 60,000 will go to process X. It will be allocated to process X. So to production overhead 15,000. Is that clear? Did you understand this? It's very simple. All we did was just took the ratio of direct labor, isn't it? 30 was of process X, the total was 1,20,000, 30 divided by 120, that ratio we used and multiplied it by the total production overhead. We got the production overhead for X. Simple. Yeah, that's very simple. You understand that. Then what do we have? Then as you can see, they have given us the normal loss. The normal loss in process X is 10%. Now normal loss is an estimate. Yeah, it is estimated by the management that 10% of the quantity will be lost no matter what. So what you have to do with that, you have to take that on the credit side of process account because you're losing the materials, it's going out. You're estimating this, okay? This is an estimation. Always remember that. These figures, right? These are an estimation. By normal loss, you're going to take that, and it's 10% of what? 10% of the input. 10% of the 1,000 units you have introduced into the process. Okay? So on that 1,000, you're going to calculate 10%. So it's very simple. 1,000 into 0.10, that's 10%. That's equal to 100. 100 quantity has been lost normally. Fine. And then the scrap value of that is given. The scrap value is rupees 3, isn't it? So it will be sold in scrap for rupees 3. So rate is rupees 3. 100 into 3, 300. So this is the scrap value. Now this is the estimated one. Okay, always remember that normal loss is an estimate figure. It's estimated figure. Okay, fine. That's clear. Now what we have to do? Now we have to see the output from this process. See here, production units. This is the output. Okay, let me write that over here so that you will not be confused later. This is what? This is the output. So the output is 920 from process X. Yeah. So 920, you have to take that over here. Output, right? It's going out of the process by process Y. Where it is going? It is going to the next process, and you all know the next process is process Y. So you have to take by process Y account 920. Is that clear? You just know the quantity till now. You don't know these, yeah, and you also don't know this also. Fine. So you just know that 920 has gone out of the process X. Fine. Now you have to see and compare this with the expected output. How you're going to do that? Simple. It's very simple. See here, how much quantity did you introduce in the process? How much is the input? The input is 1,000 units. The input is 1,000 units, and there was normal loss of 10%. Yeah, it was estimated like that. So you can expect safely that 90% of the input will be output. Yeah, 90% of 1000 you will get it out, isn't it, from this process? You can safely assume that, because 10% is the normal loss. So leaving the normal loss aside, 90% you can safely expect that it will come out. Yeah, so 1000 into 0.90, that's equal to how much? 900. So we are expecting that 900 is our expected output. This much should come out from the process X. But what has happened actually? How much is the actual output? The actual output is 920. The actual output is 920. It is more. Yeah, actual output is more than the expected output. See here, this is the expected output. Yeah, we expected that 90% will come out after deducting this 10%. And how much has actually come out? Actually 920 has come out. It is given in the question. 920 has come out. This is the actual output. Yeah, so if you subtract those two, minus 920, you're getting in minus. I told you, whenever you get, expected output minus actual output in minus, then that means you have abnormal gain. You are expecting that we are going to get 900 units as our output, but we are getting 920. We are getting more. That means we have abnormal gain. Yeah, we have abnormal gain. So the abnormal gain quantity is 20. Fine. Is that clear? Did you understand how did I get this abnormal gain? Expected output minus actual output. We got negative figure, so that's abnormal gain. Fine. So 20. Now we have to value. How are we going to value this? How can we value that? We have to value the abnormal gain and also the output at what? At cost per unit, at CPU, or we can also say star. Yeah. So how are we going to calculate that? Total debit in process account minus normal loss scrap. See here, the total debit is this one, not this. Okay, don't take this one. This still we haven't calculated this. Think like this is a blank. Yeah, this is the total debit in process account. So total debit in process account minus normal loss scrap value. Now the normal loss scrap value is this one, 300. This is the estimated one. Still we have to take that in formula, normal loss scrap. Fine. Divide by the total units input in process account. How much quantity? 1000 quantity we have input in process account minus normal loss unit, that is 100. So 1000 minus 100. Is that clear? That's what you have to do. Now don't take abnormal gain, okay, while taking the total units. Here don't consider this 20. You have to take this only, 1000. Okay, many students make that mistake. Don't do that. Yeah, so that's what you have to do. See the calculation over here. CPU calculation, cost per unit calculation, we also call that star 1. Yeah, CPU of process 1, star 1. Fine. So how are we going to do that? See, let's add all the debit side. See here, this, yeah, so 50,000 plus 20,000 plus 30,000 plus 5,000 plus 15,000. Yeah, that's it. So that's equal to 1,20,000. Yeah, so 1,20,000 minus what? Minus the normal loss scrap value. Yeah, so that's equal to 1,19,700. Yeah, let's do that. Minus 300, that's equal to 1,19,700. You're going to divide that by what? By this quantity minus normal loss quantity. So that's equal to 900. 1000 minus 100 is 900. So divided by 900, you get what? You get 133. Now 133 is your what? This is your star 1. This is your CPU, cost per unit of the process 1. That process, I mean the process X. Yeah, you can also say star X or star 1, whatever you want. Yeah, so 133 is our cost per unit. So at that we have to value abnormal gain as well as process Y, isn't it? That's what I told you, isn't it? See here, abnormal loss, abnormal gain, and the output are valued at cost price, CPU, cost per unit. So that's what we have to do. So 920 into 133, let's do that. 920 into 133, that's equal to 1,22,360. Yeah, so that's your value of the output that has gone to process Y, and then the value of abnormal gain also we have to do. That's equal to what? 133, the star 1 into 20, that's equal to 2660. Is that clear? So this is it. Yeah, now we have to tally that up. Yeah, let's see if it equals 300. Yeah, plus 1,22,360, that's equal to 1,22,660. And then here we have already done this and it was 1,20,000, isn't it? This much. So if we add that, then of course it is equal. See here, 1,20,000. Yeah, this much, this calculation, right? Then plus this new figure, abnormal gain 2660, that's equal to 1,22,660. So it tallies, and the quantity column will also tally. Okay, 1000 plus 20, 1020, 100 plus 920, that's also 1020. Is that clear? Simple. So that was process X. Was that tough? No, it's very simple. Then what do we have? Then we have process Y. Yeah, see here, process Y. Now let's get back to the question. Where is the question? Let's see the question again. So in process Y, what is happening? In process Y, the first thing that will be happening is we will be getting the input from where? from process X, this figure, yeah, this entire line will come over here as to process X, yeah, because this quantity is coming from process X, right? So to process X, 920, 133, the same figure, 1,22,360. Is that clear? We took that from here, 1,22,360. Simple. Then what do we have in the question? See here in the question we have other materials. These other materials. Now these are not the main material, yeah. These are the additional material that you are requiring in the process itself. So 30,200, yeah. So two other material, 30,200, yeah. Dash dash. No quantity, no rate. Then what do we have? The same things, same repetition. Labor 40,000, yeah. Direct expenses 2,260. So take that. Labor 40,000 and then direct expenses 2,260, yeah. Take that. Then what do we have? Production overhead. Now for the production overhead, the same calculation you have to do. You have to take what? You have to take the total production overhead 60,000 and then multiply it with the ratio of direct labor. And the direct labor of process Y is how much? It is 40,000. Yes. So 40,000 divided by the total direct labor, that's 1,20,000. Yeah. 40,000 divided by 1,20,000. If you do that, then you will get the production overhead. The same calculation. I've already explained that to you in process X. Yeah. So we'll get 20,000. See, let's do that in calculator. 60,000 is the production overhead, the total one. Then the direct labor of this process, 40,000. Yeah, 40,000. So if you do that, 40,000 divide by the total direct labor, that's 1,20,000 given in the question. See here, or you have to find it up also. 1,20,000, that's equal to 20,000. So 20,000 is the production overhead that has been allocated for process Y. Is that clear? Simple, right? So that's it. Yeah, debit side is over. Now we have to see the normal loss. Now the normal loss here is 5% in process Y. Yeah, 5%. So 5% on what? 5% on the input. Now what was the input over here? The quantity 920. So 5% of 920 you have to do. Okay, so let's do that. 920 is the input. On that 5% normal loss, 0.05, that's equal to 46. 5%, right? So 46 is what? Your normal loss. And the scrap value is given in the question. The scrap value is how much? Rupees 5. Yeah, so 46 into 5, that's equal to 230. Okay, now this is the estimated one. Always remember that we always estimate normal loss in the beginning itself. This 5% based on the previous histories. Yep, fine. So this is the normal loss. That's done. Now what we have to do? Now we have to take the output. Always output. Yeah. So output is how much? 870 in the process Y. How much? 870. So take that by process Z. Yeah, because it's going to the next process. Whatever output will come from process Y, this one, it will go to process Z, right? So that's why we are taking by process Z account. 870. Yeah, fine. Till now we don't know there's abnormal loss and we don't know the amounts and anything. Yeah, so what we're going to do now, we are going to compare this 870 with the expected output. So let's calculate the expected output. See here, the input here in this process Y was 920. Yeah, and there was normal loss of 5%. So we can safely expect that 95% of this 920 will be our output, isn't it? So 920 into 0.95, that's equal to 874. So this is our expected output. We are expecting that this much will be our output, but actually our output is how much? Our output is 870. Our output is 870. That means what? It means that, you know, the actual output is less and the expected output was more. Yeah, expected output is more than the actual output. So that means we have additional loss of 4 quantity. See here, 874, this is the expected output minus the actual output 870, that's equal to 4. We are getting a positive figure. Expected output minus actual output, we are getting positive figure. So that is abnormal loss. That is abnormal loss. We have lost additionally 4 quantity extra loss. Yeah. So now what we have to do? Now we have to value these two, and you all know we have to value that at cost per unit, CPU, right? So star 2. So let's calculate star 2. Yeah, the CPU. See, it's very simple. What you have to do? Take the total debit in the process account. Yeah, the total debit in process account. So let's add that all up and let's see how much is it. 1,22,360 plus 30,200 plus 40,000 plus 20,000 plus this 2,260, that's equal to 2,14,820. So 2,14,820, right? This is the total debit in the process account minus the normal loss scrap value, that is 230, minus 230, let's do that, minus 230, that's equal to 2,14,590. See here at the below, 2,14,590 divided by what? 920. Yeah, the quantity, the input, minus what? The normal loss quantity, that's 46. Yeah, the input quantity minus the normal loss quantity, that's equal to 874. That's equal to 874. So divide by 874, that's equal to your star 2, your cost per unit of process Y, that is equal to 2,45,5263. So we'll take 4 decimals to be accurate. Okay, so see here, 245.5263, that's your star 2. Yeah, CPU of process Y. Now what you're gonna do, now here I didn't have the space, so I have directly taken over here star 2, but you don't do this in exam. Okay, now actually in exam you don't need to prepare this rate column also, it's not required, you can just do the quantity, but for the convenience I always do this rate column. Yeah, so that's what. So now into this output 870, let's do that into 870, that's equal to 2,13,607.8. so we'll round it up. Yeah, 2,13,608. Is that clear? Yes. Then what do we have? Then abnormal loss. Now whenever you have abnormal loss over here, you can also find this as your balancing figure if you want. Yeah, you can do the balancing figure also. Yeah, so if you do the balancing figure, then also you will get the answer. Or what you can do, you can just calculate 4 is the quantity of abnormal loss, and the star 2, that is 245.5263. so into 245.5263, that's equal to how much? 982. So 982. Is that clear? So let's see if it tallies. Now we know already this figure, right? The total debit, that's 2,14,820. Haven't we calculated over here? Yes. So that's what. So 2,14,000 we already know, so it will come on the both the sides. And let's see here, 230 plus 982 plus 2,13,608, that's equal to 2,14,820. Fine, so it tallies. Yeah, process Y is correct. Is that clear? Let's go to the next process. So in the next process, what will go? In the next process, we have to take this. Yeah, by process Z account, it will go to the process Z account as to process Y, because it is in the process Y account. You all know that. Yes, that's simple. So see here, process Z account. So how you're gonna do this? First you have to take as usual to process Y 870 star 2, that figure, and 2,13,608. Yes. Then what do you have? Then you have materials of 34,620. Take that. Two other materials 34,620. Same thing. Labor you have, yeah, labor how much? 50,000. And then you have direct expenses. How much? No, you don't have direct expenses. Yeah, so to labor 50,000, and then there is no direct expenses, but I've taken over here just to show you that it is not there here in this, and it doesn't matter, sometimes it will not be there. Okay, so you don't have to worry. Fine, you don't have to go on allocating or something this 7,260. no, sometime what will happen, sometime there will not be any direct expenses incurred over here. Fine. Okay, so blank, nothing, you don't need to take anything over here. Yeah, I've just taken it just like that. Fine, just to show you. Then what do we have? Then we have production overhead. Now for production overhead, again the same calculation we have to do. Production overhead is 60,000. Yeah, or what you can do is, you have already allocated over here, right, 15,000 and 20,000 over here. So what you can do, you can take the balancing figure from 60,000 as 25,000 over here. That also you can do, or you can calculate. See, 60,000 is the total production overhead into what? Into the direct labor. The direct labor is 50,000 into 50,000. Yeah, and then divided by what? Divided by the total direct labor, that's 1,20,000. we all know that, that's equal to 25,000. so it will come over here. Yeah, this calculation we have to do. Simple, easy. Yes. Then what do we have? Then normal loss. So see here, normal loss 10%, right? So let's do that. So the input here in process Z is 870. So on this 870 you have to calculate the normal loss, you all know that. Yeah, so 870 is our input here in process Z into the normal loss 0.10, that's equal to 87. Fine, so 87. Then what you're gonna do, then scrap value, how much is the scrap value here in process Z? The scrap value is rupees 6, so take that, rupees 6. So 87 into 6, that's equal to 522. So that's our scrap value, the estimated figure. Yeah, you took that. Then what do we have to do? Then we have to take the output, the finished stock. Now this is the last process, right? So there is no process after this. So where the output will go, it will go to the finished stock account. Okay, by finished stock. Fine. And the finished stock is given over here. See here, the output 800. Fine, so take that 800. Now what you have to do, you have to compare that output with what? With the expected output. Yes. So see here, the input was 870. Input was 870, and we had normal loss of 10%. So we can safely expect that 90% will come out. Yeah, 90% should be our output. So into 90%, that's equal to 783. We were expecting that we will have expected output of 783, but actually we have got 800. We have got more. If we have got more actual output, that means we have abnormal gain. Yeah, see, minus expected output minus actual output, that's equal to what? See, minus 17. So this minus 17 is what? This is your abnormal gain. It's coming in negative, right? I have already told you, when you do expected output minus actual output, if it is positive, that's abnormal loss. If it's negative, it's abnormal gain. Fine, 17. So that's it. Yeah, now we have to value this, and you all know how to value that. Yeah, you have to do that total debit in process account, this thing minus the normal loss scrap value divided by the input quantity minus the normal loss quantity. It's very simple. Let's do that. Let's find this out first. See here, 2,13,608 plus 34,620 plus 50,000 plus 25,000, that's equal to 3,23,228. Now don't take abnormal gain, okay? We don't have till now this figure, yeah. And while taking this quantity also, don't take abnormal gain quantity. Always keep that in mind. Just commit that to your mind. I will never touch abnormal gain quantity and this also, yeah. Fine. So this is the total debit in process account minus normal loss scrap value 522. So minus 522, that's equal to 3,22,706. 3,22,706. Divide by what? Divide by, see here, 870 minus 87. 870 minus 87, that's equal to 783. Yes, so 783. So let's divide those two together. 3,22,706 divide by what? 783. Divide by 783, that's equal to 412.1404. yeah. So this is our star 3. This is our cost per unit of what? Of process Z. So we have to use that and value the abnormal gain at that price and also the finished stock at that cost price. Yeah. So again, no space, still I have taken over here what? Star 3 and star 3. So you can understand, yeah. You can see here star 3. So that's what I have taken over here. So first do this, yeah. Output into 800, that's equal to 3,29,712.3. So 3,29,712 itself. Yes. Then here abnormal gain we have 17 into the same figure 412.1404. So into 412.1404, that's equal to 7,006 rupees. Yeah. So it will come over here 7,006 rupees. Clear? So the total debit here was how much? 3,23,228, right? So add this up, yeah, plus 3,23,228, that's equal to how much? 3,30,234. yeah, 3,30,234. Is that clear? And then here how much do we have? 3,29,712 plus 522, that's equal to 3,30,234. yeah, it tallies. Is that clear? So this is how you have to do it. Yeah. Now let's see the normal loss account and the abnormal gain and the abnormal loss account. It's very simple. Yeah. Did you understand this? It's very simple. Yeah. All we had here different was what from the previous problem. We had normal loss value here, and then production overhead was there, and then what was there? That two materials were there. Yeah. One material was the other raw materials, and then the main raw material, which were the units were given and all that we considered for the normal loss calculation and everything. Yes. So that's it. Now let's go to the normal loss account. Now here we have the normal loss account, abnormal gain account and abnormal loss account. Let's understand how to prepare this. Now in the previous videos we haven't understood this practically, so let's see this. It's very simple. Now here in this question they haven't asked you to prepare the normal loss account, yeah, but still we'll understand how to prepare it. It's very easy to prepare it. It's not difficult. See how you have to do it. You just have to do cross posting from the process account. See, in the process X we have over here normal loss 300. Yeah, it's on the credit side, so you're going to take here on the debit side to process X 300. Simple as that. Then in process Y here we have 230 on the credit side. Take that on the debit side to process Y. You all know this, yeah, cross posting, just cross postings. Then in process Z we have here on credit side 522. So take it over here to process Z 522. Now all these are on estimated basis. I have been telling you this, yeah. All these, what we do, we expect that normal loss will happen in the beginning itself, and these all are estimated, yeah, estimated figures, isn't it? And what we do of normal loss are sold at scrap, isn't it? It is valued at scrap, also it is sold in scrap. So what we have to do over here, we have to sell it. And if you're selling it, then what will happen? Normal loss account will get credit because you're selling it, your loss is being reduced, you're doing recovery of loss. So buy bank, yes, scrap. So now why did I get 240 over here? Here I have got 300, but this is estimate. Always remember that these are estimates. Yeah. Now what is happening in process X? In process X there is abnormal gain. Since there is abnormal gain, you cannot sell the entire normal loss quantity 100, because 100 was the estimated figure. 100 was the estimated figure. Actually how much you have lost? Think properly. 1000 you had put in, 920 come out. Yeah, 920 has come out. So 1000 you put in, yeah, minus 920 has come out. So the remaining which we have lost 80, only that you can sell in the scrap, isn't it? So our actual loss is not 100, it is only 80. This is on estimated basis. So what we can do is, whenever there is abnormal gain, what you have to do, yeah, in normal loss account, while taking this buy bank scrap value, what you have to do is normal loss quantity 100 normal loss quantity minus abnormal gain quantity. Normal loss quantity minus abnormal gain quantity, 100 minus 20, so only 80. Yeah, 100 minus 20. Yeah, normal loss quantity minus abnormal gain quantity, you get what? 80 as your actual loss. So only this you can sell in scrap. Only this you can sell in scrap. And what is the scrap rate at here in process X? Rupees 3, right? So 80 into 3, that's equal to 240. Yeah, so you can only fetch 240 over here. Did you understand this? You will understand this. See here, let's go forward. Then what do we have? Then process Y also we have sold it in scrap. Yeah, now in process Y, what is happening? There is no abnormal gain. There is no abnormal gain, there is abnormal loss. Yeah, so there is abnormal loss means what? There is extra loss. So all this 46 is lost only. So this will be sold in scrap. All 46 will be sold in scrap. So you can directly take 230. If there is abnormal loss, there is no adjustment, nothing. Directly you can take 230. All will be sold. Is that clear? Yes. So that's regarding the process Y scrap. Then process Z scrap. Let's see what is happening in process Z. In process Z again we have abnormal gain. Whenever there is abnormal gain, you cannot sell entire normal loss quantity. This is estimated 187, because here also see here 870 we had put in. Yeah, 870 we had put in minus what has come out? 800. So minus 800, that's equal to 70. So only 70 we have lost in this process, actual loss, but here the estimated normal loss is 87. Yeah, so you cannot sell 87 quantity. Yeah, out of that 87, 17 are the good quantity. Yeah, so that will go to the output. It will not be sold. It cannot be sold. Only 70 will be sold of that normal loss. Only 70. Yeah, so that's what 87 quantity, normal loss quantity minus abnormal gain quantity you have to do, and that's 70, isn't it? 87 minus 17, that's 70. So this will be sold at the scrap rate of here rupees 6. Yeah, into 6. It's different, right? For every process the scrap value is different, so you have to take that into rupees 6. That's equal to 420. Yeah, so 420. Do you understand this? Whenever there is abnormal gain, you cannot sell entire normal loss quantity. What you have to do? You have to do normal loss quantity minus abnormal gain quantity, and then whatever quantity you get, that you can sell into the scrap value, whatever that is there in that process. Yes, you understand that. Fine. So you have done that till here, this and this, and then what will happen? There will be a balancing figure. Yeah, why there will be a balancing figure in normal loss account? Because these are on estimated basis, and this is the on the actual value. Yeah, whatever actually you have fetched from the scrap. Yes, so the balancing figure would go to abnormal gain. Because of abnormal gain, what happened? We couldn't sell the entire quantity. Yeah, we couldn't sell the entire quantity. These were estimated ones, and we could sell only the actual ones. So because of abnormal gain, what is happening? A balancing figure is coming 162. See here, add up all the debit side, 300 plus 230 plus 522, that's equal to 1052. Can you see that? Yeah, 1052. So 1052 minus what? Minus all these figures, minus 240 minus 230 minus 420, then 162 is what? 162 is your balancing figure on the credit side. So that would go to abnormal gain, because abnormal gain is bringing the difference here. Okay, so that's why it will go to abnormal gain. Fine. So in abnormal gain account, what you have to do? You understand how to prepare the normal loss account? Yeah, simple. It's very simple. Cross postings and then sell it off. Yeah, and then balancing figure will go to abnormal gain. Then in abnormal gain account, how are you going to prepare this? It's very simple. Again, the cross posting. First, take the cross posting from normal loss account itself. Here abnormal gain is there on credit side. Take it on the debit side to normal loss 162. Simple. Yeah, and then what you have to do? Cross posting from the process account. In process X, we had abnormal gain. Yeah, see here abnormal gain of how much? 2660. Yeah, 2660. So take that by process X, 2660 cross posting. And then in process Z also we had abnormal gain here, 7006. Yeah, so 7006 you have to take that by process Z. Simple. You have took the cross posting from the normal loss as well as from the process account. Then what you have? You will have a balancing figure, and that balancing figure will go to the costing profit and loss. Here it will come on the debit side, and since this is abnormal gain, right, it's a gain, so in costing profit and loss it will come on the credit side, on opposite side. Yeah, here it is debit, but in costing profit and loss it will go on the credit side, because it's gain, right? It has to go onto the credit side of costing profit and loss. So see here, the credit side is bigger, right? So 2660 plus 7006, that's equal to 9666 both the sides, minus the normal loss minus 162, that's equal to 9504. Is that clear? Now in your question, what happened in question here in this BCOM exam, the normal loss was not asked. If it is not asked, then you will not prepare here. Okay, you will not waste time and prepare the normal loss down. Directly you can calculate this 162. Okay, how will you calculate this 162? See, abnormal gain was there, right? In which process abnormal gain was there? Abnormal gain was there here of 17. Yeah, so you have to take that. See here, this is how you have to calculate. 17 into, then what do you say, the scrap value was rupees 6 in that process. Yeah, so into rupees 6, this is what you have to do. Yeah, and then one more abnormal gain was there in process X, 20, and the scrap value was 3. Yeah, so 20 into 3. Did you understand this? Abnormal gain into the scrap value in that process, abnormal gain and scrap value into that process. If you do that, then you will get 162. See here, 20 into 3, that's 60. Yes, then what do we have? 17 into 6, that's equal to 102. So 102 plus 60, that's equal to 162. So this is how also you can calculate directly this figure. Okay, you don't need to prepare the normal loss account. Okay, if it is not asked in the exam, don't go on preparing the normal loss account. Yeah, directly prepare the abnormal gain account and do this abnormal gain quantity into the scrap value in that process. Do that and add it up, you will get this figure. Is that clear? So this is how you will prepare the abnormal gain account. You understood that? Then we have abnormal loss. Now in abnormal loss account, what you have to do, in abnormal loss account, again same cross postings. Now in process Y we had abnormal loss, isn't it? See here, abnormal loss of 982. Yes, now remember this. Okay, understand this properly. You have to take that as cross posting. Simple. 982, here it is on the credit side, you will take that on the debit side. To process Y, 982, fine, that's simple. Yeah, then what you're going to do, then you are going to sell these quantities, this 4 quantity at the scrap value itself. Okay, now you will feel this is completely ridiculous, isn't it? Because you have been keep telling us that abnormal loss is valued at what? It is valued at cost price. Yeah, yes, it is valued at cost price. In the process account we valued that at cost price only, star 2. But what will happen of that loss? Are we gonna keep that loss, that faulty units with ourselves only? No, we are not gonna do that. We are going to make recovery of that 982. Whatever recovery of that 982 loss we can do, we will do that. Okay, so if we can sell that faulty unit in scrap, then we will sell it, right? That's common logic, isn't it? So that's what, whenever there is abnormal loss and there is scrap value of normal loss is given, then what you will do, you will take the abnormal loss also and you will sell it in that same scrap rate only. Okay, in the abnormal loss account. See, process Y you have taken, this is at cost price, this is coming from the process account at cost price, but you will sell it. Okay, because you will not keep the abnormal loss, those faulty units with yourselves. No, you will sell it in the scrap only. Yeah, sometime other rates will be given, it can be different rates also. Yeah, if it is exactly mentioned different rates are given, then you will take different rate. Or if it is not given, if it is silent, the question is silent, then in that process, yeah, whatever the scrap value rate is there, at that rate you will sell off the abnormal loss quantity also. Is that clear? Yes, so by bank you will sell it off. So abnormal loss is decreasing, the loss is decreasing because you're making recovery of loss by selling it off. Yeah, so 4 quantity into rupees 5. Yeah, 5 is the scrap value, right, in process Y. See here, where is the question? Let me get the question. Oh, where did I put that? Yeah, here. See, in process Y the scrap value is rupees 5. So at rupees 5 it will be sold off. So 4 into 5, that's 20. Simple, you know that. Then what? Then you will balance it out, and whatever balance is there, it will hit, of course, costing profit and loss. Now here it will come on the credit side, but in costing profit and loss it will go on the debit side. This is loss, right? So of course it has to go to the costing profit and loss debit side. So that's why it will come over here on the credit side, and in costing profit and loss on debit side. Is that clear? So yeah, simple. This is how you have to do it. It's not tough. Okay, unless and until different rates are given, you have to take what? The same rate. Okay, to sell off the abnormal loss also. So you understood how you have to do. The only thing was bit tricky was only the normal loss, isn't it? If there is abnormal gain quantity, what you have to do, you have to subtract that normal loss quantity minus abnormal gain quantity, and then you have to multiply that whatever quantity you get with the scrap value, and you will get the sale value. Yeah, the total scrap value. Did you understand this? Simple. This is what you have to do. Okay, simple, easy. Okay, I have already explained the format and everything of this, okay, in the conceptual video in proper detail. Why do we do this and everything? Yeah, all the logic properly I have explained there. Yeah, if you want to understand the format and everything. Yes, so this is it. Yeah, this is it. You can go on our Telegram channel and get the notes. All right. Okay then. See you in the next video. Bye.